As the former United States Secretary of the Treasury, it was my privilege to work with governments throughout the world to combat money laundering. Money laundering is the process that enables drug and gun traffickers and terrorist groups to convert illegal and unusable proceeds into usable funds. It is the lifeblood of organized crime. It is also a problem of global proportions with very dangerous and destructive effects on our economies and on both our private and public institutions. Citigroup is committed to the fight against money laundering. Whatever business you're in, whether insurance, securities, or banking, whatever job you do, whether you're an investment banker or a broker, whether you're in operations or sales and trading, whether you're a supervisor or a clerk, you need to know the anti-money laundering policies and procedures that relate to you and the compliance officers you can contact with your questions and concerns. The financial services industry has an obligation to close off the channels that criminals use to help underwrite all manner of crime. Now, I would like to introduce my former colleague at the United States Treasury, Ron Noble. At Treasury, Ron was the Undersecretary for Enforcement. Now, as Secretary General of Interpol, Ron is making use of his vast expertise on law enforcement issues and is demonstrating the unwavering commitment to justice that has marked his entire career. Ron.
Thank you, Bob. We are here at Interpol headquarters in Lyon, France. Interpol, the World Police Organization, has a major interest not only in tracking down criminals and dismantling their organizations, but also in preventing crime. Most crime is for profit, and most profits of criminal organizations must be laundered or legitimized through institutions like your own. Therefore, we need your help. Criminals who are successful in amassing large fortunes are a threat to our democracies and our economic freedoms. You are an important part of our efforts to ensure that they do not succeed. You're about to watch 3 scenarios on the prevention and detection of money laundering involving brokerage services and insurance products. The first scenario involves a firm that has opened accounts managed by an outside investment advisor. In the second scenario, a young broker signs up a new client, an investment club that was introduced to him by a personal reference. The personal reference and the investment club, however, are not what they seem. And in a third scenario, it's not a young broker, but an experienced and seasoned broker who lets his guard down, relying on what he thinks is a solid referral. The 3 scenarios have several important characteristics in common. Each one involves a money laundering scheme where cash is not used. This is important for those of you who mistakenly believe that you're not vulnerable simply because your clients don't deal in cash. In fact, any type of financial transaction can constitute money laundering if the funds involved are criminally derived. That's why it's critical to understand your obligation to know your customer and the source of your customer's funds. In each of these scenarios, a different method of placing tainted assets into a firm is used, with a common intent to disguise or conceal their illicit source. See if you can spot these red flags as you watch this program.
Legitimate financial institutions and money laundering organizations have a lot more in common than you realize. They're both global, well-organized, and driven by the profit motive. They know how to move funds efficiently and effectively, and they both maintain their own enforcement programs, although the way I kept my people in line was much more effective. We hire people who are smart, who dress well, join the right clubs, and drive the right cars. Some even have MBAs. We look so much like you that you embrace us wholeheartedly while we were using you to wash our money. Look, you may have caught me, but you don't have a clue about what's really going on out there. Your team isn't even playing in the same league. You're used to the Hollywood version of bank robberies, but we don't carry little sacks of cash out to waiting getaway cars. And if it's too difficult to penetrate a bank, we turn to brokerage firms and insurance companies. None of you are safe.
Good morning, everyone. I thought that excerpt from our recent hearings would be a fitting way to begin our meeting today. That witness made it startlingly clear that banks are no longer the only financial institutions to fall prey to the bad guys. Brokerage firms and insurance companies are also being exploited by some very clever people. People who need to launder billions of tainted dollars, pounds, francs, what have you. That is why my colleagues from law enforcement and the regulatory agencies who make up this international task force are very pleased that members and representatives from the private sector, specifically the securities and insurance industries, could join us today, in person and by teleconference. So, if you will, I would like to welcome our guests joining us via satellite from Hong Kong.
Good morning, London.
San Francisco, Prague, Johannesburg.
Thank you, London.
New York, and Mexico City. We also have Paris and Riyadh joining us via speakerphone for the audio portion of our conference. Very warm welcome to each and every one of you. Now, as you know, we've been convening regularly to review and coordinate law enforcement's efforts at combating international money laundering. We've all felt that an appropriate working partnership with the private sector is a crucial component in that effort. And I know I speak for the entire task force when I say that all of us look forward to enhancing this working partnership with you all. So, at today's conference, we're going to hear from members of the securities and insurance industries here in London and from New York and San Francisco. Our first speaker is Mr. Andrew Richardson. Now, Mr. Richardson heads his firm's International Investors Group in New York. And he's come all the way to London, well done, Andrew, to share with us all a recent experience. Andrew?
Thank you, Commissioner. First, I would like to take this opportunity to thank you on behalf of my colleagues in the financial services industry for this opportunity to participate in today's meeting. Now, the incident I've been asked to tell you about happened during an incredibly busy week, very busy and profitable week. So the call from compliance just caught me completely off guard. There was a lot at stake. So I decided I wanted to discuss the situation with my boss. Hey, boss, you got a minute?
Actually, no, Andrew. I'm on my way out.
Yeah, well, listen, compliance called. They're concerned about an account in Europe, a very lucrative account.
What account?
It's an institutional client of Branch 19B.
Branch 19B?
Yeah, why?
Well, listen, Andrew, I know you're fairly new to this firm, but we've had some problems with that branch before you started here. Charles, can you do me a favor? Can you fill Andrew in on 19B, please?
Yeah. There was a big scam over there about a year ago. Some phony investment advisor set up an account with them. Lots of third-party wires come in from duped investors, we later find out. The whole time, the funds are never invested. They just sit there in the money market.
How'd they miss that?
Well, we didn't know it at the time, but the guy had been under investigation for a long time. Finally, he gets indicted. Then the government steps in, seizes the entire account, and then wham, just like that, we're all out the bucks.
Huh.
What do we stand with that now?
Well, it's still in litigation. Why do you ask?
Well, compliance called, something Andrew's working on. Listen, can this thing wait?
Not really. I got Henson on my back.
Okay, let's go. Charles, can you join us, please?
Sure.
Andrew, start talking.
Well, an offshore investment advisor called us to set up an account for a group called the Royal Management Limited Hedge Fund.
Sounds familiar. Charles?
The Royal Management, headed by a guy they call the governor.
Yeah.
Former head of a central bank down in...
Yeah, but this has nothing to do with the central bank. Now, he retired from the bank a few years ago. He started this fund with his own personal fortune and money from a few investors that he knew well.
So what's bugging compliance?
Well, the fund was being managed by a reputable Swiss bank, okay?
Right.
Then we got it from this new investment advisor that used to work with the governor at the central bank.
You realize that that country has a terrible history of public corruption.
Yes, but...
Then why would we want this account?
All right, his country has a bad reputation, but we did a lot of research on him before we opened the accounts. We even had security check his references. The guy's clean. Everyone knows that. And don't forget, the fund itself was in a country with very strong anti-money laundering and KYC rules.
So what's the bottom line here?
The fund has grown considerably in the past 3 months. They anticipate $200 million in assets by year end. That is a lot of money to give away to our competitors.
Where are that?
They're also the biggest producers in the region.
Where are that too, Andrew?
Then you know they're not rookies at doing this, Tibor.
Did you know how many investors Royal had?
Well, we were pretty certain that Royal was limited to the governor and the few investors he was close with.
Did you know who they were?
No. We did not know exactly who the other beneficial owners were. You know, IAs almost never share that info with us. They're afraid we'll steal their clients. Anyway, the desk has all the required paperwork. Everything seems to be in order. The investment advisor is going to send us his own KYC policies and procedures. He is perfectly comfortable with Royal and with the other offshore funds he's opened with us over the past several weeks.
What other funds? How many?
Next time, my dear.
You come to hold, please.
Sure.
How many?
9.
9?
Yeah, he opened 6 about 3 weeks ago and 3 more about a week later. They all came from the same Swiss bank.
Who are the investors?
Mostly personal investment corporations, all incorporated in secrecy havens. Cayman Islands, Isle of Man, Cyprus, British Virgin Islands, some usual places.
Pretty standard stuff for this type of business place.
I know that, but it's still risky. You had nothing to do with setting up these pits. Now, if I understand you correctly, we don't know who their beneficial owners are. Now, what documentation do we have about these 9 other accounts?
The same type as we have for Royal.
Did you have any information about the investment advisor?
That's exactly what Tibor asked. The truth is we didn't know much about him, except that he worked for the governor at the central bank and was just starting on his own. Apparently the governor thought very highly of him, so he pulled Royal from the Swiss bank and let the IA manage it, I guess to get him off to a good start.
And was he registered in the U.S.?
No, the investment advisor wasn't registered in the U.S., and we really didn't know much more than that. The other 9 hedge funds, of course, weren't registered either, so...
So, Andrew, just let me get this thing straight. The IA sets up a total of 10 accounts, carrying the name of 10 different hedge funds, with no identifying information on the source of the money or who owns what. Is that right?
Yeah, something like that.
Look, I know it's hard to get this stuff, but what do we know about them? What's the trading activity been like? And why did these 9 other funds leave the Swiss bank?
Nick's still on hold. What should I tell him?
All right, I'll take her right now. Nick, how are you?
Tibor, where have you been? Didn't you get my messages?
I just got them. So what's been happening?
Look, things are moving really fast over here, so tell me, what's going on with these hedge fund accounts?
Well, Andrew and I are just discussing it.
Andrew, you know we're all counting on you to explain to Tibor why this is okay.
I'm working on it, Nick.
Tibor, we're building an important relationship, and all of a sudden, compliance is calling with one question after another. If we lose this because of some overcautious sheriff, Tibor, I mean...
Nick, I hear you. But I don't like what I've heard so far. Okay, first of all, we know little or nothing about the IA. And we don't know anything about the beneficial owners or the source of the funds. It's just a bunch of red flags as far as I'm concerned.
Oh, come on, Tibor. We have all the account opening documents, and the governor's a straight arrow. You know that.
Nick, what's the trading been like?
Look, Tibor, we can stop taking in the third-party deliveries, and if you like, I'll even tell them no more stocks that research doesn't cover.
Hold on, Nick. What's he talking about, Andrew?
The trading on all 10 accounts was originally treasuries and blue chips, plain vanilla, that's it. For the last 3 accounts, recently delivered in shares of some .com I'd never heard of. The share certificate said the owner was a third-party corporation, also incorporated offshore.
A third-party delivery?
Yeah. Those 3 hedge funds sold 300,000 shares last week and another 300,000 shares 2 days ago, with both sales away from us.
That's prime broker.
We're the custodian?
Yeah.
And then what happened?
Once we settled, we received instructions to wire the money back to the corporation's account in the Cayman Islands.
Oh, damn.
And another 1 million shares were delivered in yesterday.
Is research covering this company?
No, but I had an analyst check it out. Apparently there's a lot of excitement about the company in some popular internet chat rooms.
Now, that's a reliable source. You ever hear of pump and dump? Nick, are you still there?
Yes.
Nick, I want to know 2 things right away. 1, why the change of strategy for these 3 hedge funds? And 2, I want to know who owned those .com shares that were delivered in.
Look, Tibor, I understand your concerns with the last 3 accounts. And like I said, We don't have to take in any more of those securities or any more third-party transfers. But you're overreacting here. I've spoken with the IA, and he's fine.
So, Andrew, what did you do?
Well, we hired an outside investigative firm to do some additional due diligence. But the cost is well worth it with an account that big. They told us that from their inquiries, they got the distinct impression that the 9 funds, not counting Royal, had not been with the Swiss bank for very long.
Did they find out anything about the beneficial owner?
Well, they also learned that the beneficial owner of the third-party corporation that delivered in the .com certificates was a single person, Mr. Hughes. It turned out that Hughes was a U.S. citizen who had been barred from the securities industry several years ago by the SEC for fraud. He was convicted and served a 3-year sentence. It was right there on the SEC's website.
So, Andrew, if you had to sum up your experience, could you do it?
Well, I'd have to say that we had 3 hedge fund accounts whose investors were PICs, incorporated in secrecy jurisdictions that had received in shares from a third-party corporation owned by a convicted felon. There was also the clear possibility of stock manipulation and the inability to get the IA to allow the Swiss bank to issue a reference. So much for the investment advisor's KYC.
Quite right, Andrew. And I'd like to comment on your firm's use of the outside investigative firm to supplement the Know Your Customer due diligence. Now, that was a wise decision under the circumstances, but I don't think anyone would suggest that going to an outside firm is necessary in all cases, especially when you have the internal resources to do the job. The type of investigation and due diligence that is needed has to be assessed on a case-by-case basis. Also, your firm's customer here was a financial intermediary. I think it's important that you always look to see whether there is government-issued guidance in your jurisdiction as there is here in the UK. When a firm is dealing with a financial intermediary, there are a number of factors to consider in determining the risks, such as what is the intermediary's reputation and experience in the industry? Is there a prior relationship with your firm? Where is the intermediary located? Domestic? Offshore? Is the intermediary subject to regulatory oversight? What standards are applicable for him to identify and know his own customers and document that information? Where is the intermediary's customer located? And finally, if the customer is a fund, is it an established fund or a startup fund? Well, are there any further questions for Andrew?
What was the reaction of your firm?
Well, we've tightened up our own rules about relying on someone else's KYC, I can assure you of that. We terminated the relationship with 9 of the 10 hedge funds and filed a suspicious activity report with the government.
How did your manager deal with your colleague, Nick?
I hope you're right about letting this entire relationship go, because some of the guys on the desk tell me that every firm that does offshore hedge fund business operates with risks like these.
Not this firm, Nick. Tell the desk that I personally said, not this firm.
I'm a business manager for a security firm here in Prague. I was wondering why file a government report with no evidence of drug trafficking?
I'll take that, Andrew. In the US, the law requires certain financial institutions to report suspected crimes or suspicious activity, including possible money laundering. They don't have to prove illegal conduct. In the US, as in many other countries, money laundering is not limited to drug money. It can involve upwards of 150 serious crimes, such as embezzlement or securities and financial fraud.
We've even filed suspicious activity reports on electronic and internet scams we've detected.
As it turns out, ladies and gentlemen, the governor was an honest man, and the Royal Hedge Fund was legitimate, but the others were not. It wasn't that the investment advisor was dishonest. He was just young and inexperienced, and he leapt at what he thought was a golden opportunity. He didn't ask the hard questions about the source of the funds in the accounts and the identities of the investors, and he ignored the red flags. As for the 9 accounts that left the Swiss bank, well, they had actually been kicked out and reported to the bank's regulators. Their operatives have been indicted on money laundering charges, and this happened 3 weeks ago. As for the investment advisor, well, he's still under investigation under the willful blindness theory, and that is something which we will take up in greater detail a bit later on. You know, it's a good thing that your firm filed a suspicious activity report when it did, Andrew, because if it hadn't done so, if it had chosen instead to ignore the red flags, it would have been at risk of being indicted as well. Thank you, Andrew.
No, thank you, Commissioner.
Well, at this time, I would like to ask Mr. Colon, the host of our San Francisco conference site, to take the floor. Mr. Colon.
Thank you, Commissioner. In the interest of time, I am going to ask Special Agent Turner to introduce our next speaker. Agent?
Thank you, Mr. Colon. Good morning, ladies and gentlemen. The woman seated to my left recently pleaded guilty to money laundering charges. She and the members of her team, part of a larger international ring, were apprehended following 6 months of surveillance in the San Francisco area. Now, she is currently serving a prison term, which has been reduced because of her cooperation, including her appearance at this conference. As the witness in the video mentioned, money laundering organizations and financial institutions have a lot in common. Ms. Gobet?
I was told to give you an example of my work. So I guess that's what I will do. In the beginning, my job was to find a mark. I used to scout places where I knew I could find inexperienced and overly ambitious brokers. So I used to spend a lot of my time at upscale health clubs. Anyway, pretty typical how these things would go. I struck up a conversation with a guy, in this case a guy named Bill, who I'd said hello to on a few occasions. I steered the conversation towards what he was doing for a living, and he told me what I already knew. I am a broker, he said, as he showed me his gym bag with the name of his firm prominently displayed on the side. What a fool that one was. Anyway, I casually mentioned that my aunt and uncle had started a church group investment club, and how they were always saying that they needed professional help. Might your firm handle accounts like this, I asked. Oh, yes, he said. So the game was on. I invited him to meet with my auntie and uncle at their home, and I introduced him as a friend of mine. They filled him in on the club and its members, a retired lawyer, a couple of accountants, a professor of finance, 30 in all. My aunt and uncles also charmed Bill with small talk, flattery, both professional and personal, and even hinted that we made a very nice couple. They laid it on thick, and he bought it all. Well, Uncle, though, wasn't a very nice man. It wasn't only about money. He enjoyed making fools of guys like Bill. The next meeting was at Bill's office, where they got down to business. They answered all the questions, signed all the relevant documents to open the account, and even gave him a phony investment club agreement and a list of the club's members. You know, he never bothered to verify if any of the members actually existed. All phony names on the list. Then came the first test. They told him about the 8 new members who had just joined the club, and that she had the initial contribution of $7,000 each with her, a mix of traveler checks, blank money orders, and even some checks from out of state. No problem, he said, and off he went to have his assistant deposit them into the account. He tried to bluff her. When she protested that the deposits were highly irregular, he charmingly explained that the out-of-state checks made sense since it was an investment club with members scattered all around the country. He even stamped in his firm's name where the pay lines were blank. When they saw how easy it was to make these deposits, they decided to gamble. And it paid off. They told Bill that some of the club members were a little eccentric, that they still held stock certificates in their own names, and could they deposit these stock certificates with him to be held in safekeeping? He took the certificates, no questions asked. Then my aunt said that she was glad that the account could be open in time for the club's next meeting the following week, and she asked Bill for a letter on his firm's stationery confirming that he was going to be the financial advisor. She also asked that the letter state the parameters of SIPC coverage and a list of the services offered by the firm. And finally, she asked Bill to also mention the stock certificates in the letter.
Agent Turner, could you clarify this? Maybe explain the significance of the letter?
Well, I'll try. You see, Bill's manager never would have signed such a letter, but his manager was in a meeting, and Bill, eager to please, signed the letter himself. Now, those certificates were counterfeit, but since they were held in safekeeping and not re-registered in the street name, no transfer agent or anyone else ever checked. They used the letter to establish other accounts on the street and as collateral for loans.
You got it.
Sending out that letter also violated his firm's own policy. Please continue.
See, by then, Bill was already working for us, and he didn't even know it. When Bill asked for a copy of a statement from the firm currently handling the account so he could complete the transfer form, my uncle said he had forgotten it and promised to send it as soon as he got home. And guess what? He never did send that statement. Anyway, within a week, we started sending in more and more money orders, traveler checks, all in amounts under the reporting thresholds, and we even sent in some foreign bank drafts. They went to the firm's PO box where we knew that the people processing them probably weren't trained to notice this form of payments. When Bill called up to suggest some investment, my uncle told him that the club members were concerned with the current market volatility, the interest rates, and that they wanted to wait a while before doing anything. Sounds pretty reasonable, no?
I have to say, it's quite shocking how easy it all seems to have been.
A well-conceived story, a little charm, and you're in.
Well, you have to admit the broker's inexperience certainly helped you.
Tout à fait, you bet it did. But I've done the exact same things with experienced brokers. Now, in Bill's case, it was his naivety. With older brokers, it's usually their arrogance. We've done it more times than you could imagine. Never fails. Well, almost never.
Excuse me? Excuse me, please.
We have a question from Hong Kong.
I am sorry for interrupting, but was there not anyone supervising this broker? I mean, all these suspicious deposits and no investments being made. It sounds ridiculous.
Agent Turner, are you familiar with that aspect of the case?
From what I know, he was questioned by his operations manager. He told her that he had personally met these clients face-to-face and that they came from a solid referral. Apparently, in Bill's mind, that was enough to overlook the red flags that kept popping up. He also reminded her that they had all the required documents.
All phony documents. We ran over $2 million to that account in just over a month. Never made a single trade and cashed out by writing a check against good funds. We even wrote a few third-party checks before we left. If Bill had bothered to ask, which he didn't, we would have told him that the checks were to members who were leaving the club. We never got into discussing Bill's investment philosophy in any detail. I'm sure eventually he would have pushed the issue, but by then we were gone. And to think that it all started in a health club.
Excuse me, Oscar, do we have time to go into how the ring was finally broken?
Maybe Agent Turner can give us a brief synopsis. Agent?
Well, our investigation actually started because of a suspicious activity report relating to wire fraud that was filed by a competing firm to the one where Bill worked. Now, one of that company's employees, who had been placed there by a very sophisticated organized crime group, had access to the company's funds transfer system as part of his job responsibilities. That company lost more than $25 million due to unauthorized transfers he made before his firm discovered the scam. Now, as part of his plea agreement, he gave us a lot of information on his organization. Turns out, he was part of the same ring as Ms. Gobet.
Quick question, please.
Yes, Johannesburg.
You cooperated with law enforcement. How about your auntie and uncle?
Oh, auntie and uncle. Well, I turned them both in. They're in jail now.
What about the broker Bill?
It was really never my concern.
I'll take that, Oscar. Bill was forced to leave his firm for failing to comply with his firm's account opening procedures for investment clubs. Also for failing to notice and report suspicious deposits, and for writing the letter that was used to scam other firms. Bill needs some training, to say the least. I should also add that law enforcement is questioning his actions. Was he just stupid? Was he just negligent? Or did he know what was going on and decide to ignore it? Well, thank you, Agent Turner. Thank you, Ms. Gobet and Mr. Cologne. Oh, in the interest of time, I'd like to switch over to New York now, where Roberta Reardon is standing by. Roberta?
Thank you, Commissioner. Welcome to New York. It's been a very enlightening conference to this point. Here in New York, we will be hearing from a broker with one of the so-called financial supermarkets, Mr. Stephen Landers. Now, Mr. Landers has been a broker for more than 25 years, is going to share with us one of his more unfortunate experiences. Mr. Landers?
Thank you, Roberta. Well, as you heard, I've been in the business for quite some time. And I consider myself, or should I say considered myself, pretty savvy. You know, I figured that the less experienced brokers, guys like Bill, well, they'd be the target more than likely for these con artists. You know, we're always reminded by our managers and in training sessions to be aware of the walk-in customers and the broker of the day calls. And since those types of customers usually go to the rookies, I never really gave it much thought. But I came to realize that even experienced brokers like myself, well, we're just as vulnerable. It's just different. Maybe it's complacency, maybe it's the daily grind, but whatever it was, I got conned. Big time. You know, we get so much training on how to cross-sell, how to cross-market, how to prospect and look for synergies. Synergy is the buzzword this year. Well, that was the direction I was headed with this couple, who were referred to me by a local accountant that I had dealt with previously. Now, little did I know where they were headed, and that they were always just a few steps ahead of me. It involved variable annuities and insurance products of all things. Now, I've been a stock picker my entire career, and I've been a very good one. But I'm licensed and appointed to sell insurance products now. Most of us are, since these products are really useful for estate planning and tax-deferred savings. Now, what I didn't realize, and what most of my colleagues didn't realize, is that some of the major selling points of these products also make them excellent investments for money laundering.
Ernest Jones?
Oh, yeah. Good stuff.
Mr. Landers, I don't know how much Roger told you about our family business or about our need for...
Excuse me 1 second, I better take this call.
Oh, sure, go ahead.
Actually, Roger, their Hey, accountant, Dylan, what's hadn't up, told buddy? me anything. In fact, I hadn't even spoken.
Yeah, I know, I'm looking at it.
The Joneses had set up an appointment through my assistant, and that's all it usually takes to get on my calendar. In fact, that's all it usually takes to get on anybody's calendar in this business. Okay. Sorry about that, folks.
That's okay. Anyway, we met with him in connection with an inheritance that my wife will be coming into in the next few weeks. Her aunt died recently, and she and her sister are the only living relatives. The lawyer, well, I forget his name, but, well, he spoke with Roger and said that my wife's share of the estate would be about $800,000, plus some very nice properties up to date.
Over time, we expect to sell all but one of the properties. A nice weekend home by a beautiful lake. Isn't it nice?
Very nice.
Anyway, Mr. Landers, for the first time since we started our restaurant business 5 years ago, we finally have a decent amount of money that we won't be reinvesting into the business.
The restaurant's been a great success, but we've literally put every dime back into the business. With this inheritance, we were thinking we could finally put some money aside for our retirement. Roger mentioned you could help us with this kind of planning.
What type of retirement estate planning do you have now?
Well, I have a small-term life insurance policy. I probably need more coverage. And we both have our IRAs. But the restaurant never really started a pension plan, and we never really started saving for our retirement because it just seemed like such a long ways away.
But with this inheritance giving us what we like to call our nest egg, we were thinking we could see, you know, we could invest. We could invest it. Roger mentioned something about annuities.
Yes, he said we should discuss those with you, but I'm a little bit embarrassed to say I really don't know exactly what those are.
Despite the fact that I was feeling lousy, I just couldn't seem to shake this cold that I had. I remember thinking to myself, yes, this is going to be a good day. Now, I didn't rush it, and they certainly didn't rush me. I asked them several questions, like an estimate of their net worth, their investment experience, you know, risk tolerance, their investment objectives, prior brokerage relationships, things like that. Kids. Did I say kids? Mrs. Jones even showed me snapshots. Pictures, the kids, the house upstate. They told me as soon as they sold some of the properties upstate, they'd be sending the proceeds of the sale to be invested for their kids' college education. Cute kids. When do you anticipate selling the properties?
Well, 3 of the 4 are up for sale now, and we've gone to contract on one of them, and we hope to close in the next few weeks. The others, I'm not really sure about.
All right, so you mentioned you'd like more life insurance coverage, you want a more comprehensive retirement fund, and you'd like a college fund vehicle for your kids, and you expressed an interest in learning about annuities. Okay. So why don't we start with annuities?
What did they think of the annuities?
Well, they listened and were fast learners, I thought. Initially, I would have recommended that we set up a qualified pension plan, but they steered me away from that. Towards the non-qualified annuities by referring to what the accountant had supposedly told them. Later, I realized that the qualified plan would have had limits, a roadblock, shall we say, about how much money could be put in and who could put money in. And it would have been subject to more regulatory oversight, which, of course, they wanted to avoid. They also obviously knew that with the amounts we were discussing, they wouldn't be subject to the same underwriting due diligence that they would have gone through if anyone had bought straight insurance products. I'm also sure that they knew that the application for the annuities required only a mailing address, at least at our firm, as opposed to a home address, which, of course, could be checked. Yeah, they liked those annuities. You could pretty much deposit as much as you like. It grows tax-deferred until it's withdrawn, and they love the ability to make a large lump sum investment right up front.
What money launderer wouldn't, Mr. Landers? I'm sure they probably like the menu of mutual funds, borrowing against the cash value, death benefit.
You're right. You're right. Simply put, they seem no different from anybody else who's ever considered annuities as an investment.
Mr. Landers, can we each buy an annuity with a life insurance feature?
Absolutely. You can purchase multiple annuities, and you can designate each other or your children as your beneficiaries. And don't forget, there are no contribution limits on the amounts that you're considering.
That sounds perfect for us. Mr. Landers...
Please, call me Steve.
Steve, what happens if we make the investment and then have second thoughts?
You see, that's the beauty of this investment product. You have what we call the free look period. It's usually 10 to 30 days, during which time you can cancel the annuity and get your money back with no penalty. After that, you can surrender the annuity at any time, but there can be an additional penalty of up to 10% plus additional tax penalties if you surrender the annuity before age 59 and a half. You know, when I found out that the going rate to launder money can be as high as 20 to 25%, you know, that 10% penalty looked like a bargain. As far as a tax penalty, well, the fake Social Security numbers they gave me, I don't think they were too concerned about our reporting an early cancellation to the IRS. The only thing they seemed concerned about was my offer to come to their home or to the restaurant for our next meeting. You know, I should have been, at least I should have seen a red flag when they put me off, saying it would be more convenient for them to, you know, come to my office. But anyway, a few days later, the phone rang. Yeah.
Mr. Landers, Ernest Jones here.
Ah, Mr. Jones, how are you and your wife?
Oh, we're fine, thank you. I'm calling because our lawyer says that the estate distribution should happen by the end of the week.
Okay.
Also, we showed the materials to my brother-in-law, who's a lawyer.
Yeah.
He says you're with a great firm and that the brochures look good. He suggests investing 80% of the inheritance and keeping the other 20% liquid.
Okay.
Yeah, we'll be in your part of town tomorrow, and we can drop by, pick up the paperwork if it's ready, sign whatever, and then we can instruct our lawyer to wire the funds directly to your firm.
That's the lawyer handling the estate?
Yes.
Well, I don't have a problem with that, Ernest. In fact, since you've already filled out the application when you were here, I'll just fax it over to the insurance company right now.
Uh-huh.
And I'll have my assistant pick up, and she'll give you the wire transfer instructions.
Okay, I'll talk to you. Bye-bye.
So, we opened the accounts. I wrote the tickets for the annuities, and the money was wired in. You know, I should have recognized another red flag, though, when our operations manager initially had trouble reaching the Joneses to verify part of their instructions. Because about 10 days later, Mrs. Jones calls to say that they'd closed on an upstate property, and could they wire those proceeds in, too, about $1.2 million, which is currently in a lawyer's escrow account.
Was it the same attorney who handled the estate?
I didn't ask. I guess I should have.
What happened next, Mr. Landers?
Well, the next day, my branch manager calls me into the office, and he's on the line with the compliance officer. They wanted to know about the third-party wire transfers. They wanted to know about both of them. You know, I was a little surprised because it all just seemed so legitimate. It did. It just all seemed so normal.
Excuse me, Steve, where did you say the first transfer came from?
The one for $800,000.
From the lawyer that handles the aunt's estate.
Did you speak to the lawyer?
Of course not. Why would I have spoken to the lawyer?
Well, this may sound a little odd, but how do you know the transfer really came from a lawyer? Or for that matter, that the lawyer even exists?
You're right, it does sound odd. In fact, with all due respect, it sounds ridiculous. You have the lawyer's phone number and address, right?
Yes, I do.
For one thing, I never heard of the firm.
So I looked them up in the phone book, and there's no listing for them. So then I did an internet
search on the Bar Association website. There's no listing for them there either.
Did you ever verify them, Steve? Steve?
I never got around to it.
Guys, look.
Lots of times a wire transfer coming from a third party will come from an escrow type account, where you never really know for sure whose money it is. You know, the beneficial owner. That's why the bad guys use them, and that's why we are always talking about how you have to know the source of the funds.
Pardon me, Mr. Landers. I think this would be an appropriate moment to show a bit more of that tape that we used earlier, if you don't mind.
No, not at all.
Right then. Rotate, please.
That's right, gentlemen. I'm talking about Fed funds, chips, SWIFT, you name it. You can move money electronically around the world in seconds, and they can't get it back. And I'm talking big, big numbers. We sent so many third-party wire transfers, to hide the trail, it would make your head spin. And then we'd give the standard explanation, if they even bothered to ask. That's right, ma'am. The third-party wire is to pay off an intercompany loan. Yes, sir. It's going to a title company escrow account to buy some property. Or, you might say, yes, we're making a private investment. You would be amazed at how few firms control this activity and how they don't bother to verify even the flimsiest explanations. A real vulnerability, in my humble.
Would you agree with his assessment, Mr. Landers?
Yes, I would.
Steve, by the way, what was the name of the aunt who left her the money?
I didn't get the aunt's name.
Okay, I see here that your operations manager had trouble reaching Mr. Jones to verify the wire instructions. So I took the liberty of checking the phone number on the new account application. Did you know it was a pager?
Yes, he said he was giving us a pager number because he was out a lot and hard to get a hold of.
Well, didn't you find that a little strange?
No.
I mean, every restaurant owner I know complains that they practically live at the restaurant. Did you visit the restaurant?
No, they said it was more convenient for them to visit me in my office.
Well, you also said that there was no answer when you called the restaurant. Didn't that raise any red flags? There was also no home address on the application, just a mailing address. Did you know that the mailing address they gave you was a mail drop? You know, one of those storefronts with lots of little boxes for rent?
Excuse me, Carol, can you hold on for a sec? I have another call I have to take.
Sure.
Steve, are there any other surprises I need to know about?
Oh, come on, Les. I mean, you know how it is. I mean, I just got really busy. I didn't think to check those things. I mean, what they told me initially made sense, right? The referral from Roger, that CPA that I'd worked with before.
Did you check with Roger? Does he even know them?
I don't know. I didn't ask him.
Come on, Steve. It's standard ops. You know, you've put us both in a bind here. Sorry. Go ahead.
Okay. Listen, Les, Steve.
You'll probably be hearing from the insurance company in the next week or so. And if this thing goes according to script, your client is going to want to notify them that they want to cancel all of the annuity contracts, which is their right to do, as you know, during the free look period. I want you to call me immediately if that happens.
All right. Is that it?
No. Not so fast. What about the other wire transfer, the one for $1.2 million? You said that that one came from the sale of some property.
That's right.
What property?
Uh,
Never mind. Look, I have a contact at the bank that wired in the money.
Let me see what I can find out. And in the meantime, if you hear from either Mr. or Mrs. Jones, just to act like everything is fine. The last thing that we want to do
is tip them off that we think that their transactions are suspicious.
So I called Roger, the accountant who made the referral, and things only got worse. He told me that the Joneses had attended a seminar open to the public, hosted by his firm, along with about 250 other people. Now, after the seminar, the Joneses made an appointment to see him. I mean, they actually paid him for an hour of his time for like an initial consultation. They told him the same story they told me, about the inheritance. He never called the lawyer to refer to me, just passed him on to me. Lesson number 1, there are referrals and there are referrals.
Was there a resolution to the case? Did things go according to the script?
Sure enough, I received a notice from the insurance company that Mr. and Mrs. Jones had a change of heart. They wanted to cancel the annuities and instructed the insurance company to refund the principal by check. So I immediately called the compliance officer, Carol. She told me she had spoken to her contact at the bank, and she learned the Joneses had opened the bank account there only a month before they got to me. Now, according to her contact, that bank account was funded by the deposit of a check drawn on another major insurance company. Now, these guys were good. So she calls the insurance company, learns that the check they cut was for a loan against the cash value of a variable life insurance policy purchased about 3 months earlier.
Did your firm take a hit, Mr. Landers?
Well, actually, we caught a break. I mean, luckily we filed a suspicious activity report and notified the authorities before the funds moved out.
What about the Joneses?
Mr. and Mrs. Jones. Not their real names, of course. Must have gotten suspicious because they've disappeared. The funds have since been, of course, frozen by the government.
And how did you fare, Mr. Landers?
Well, my entire client list was scrutinized like you wouldn't believe. I had to answer lots of questions about everyone I'd ever done business with, which took hours away from production. I received a formal letter of caution, which is now a permanent part of my record, and I was required to attend a series of anti-money laundering training sessions. Had to hire a lawyer at my own very considerable expense until the investigation was over. In retrospect, I guess I was lucky I wasn't prosecuted myself.
Excuse me for interrupting, Mr. Landers.
Yes, go ahead, Mexico City.
Why do you feel lucky, Mr. Landers? Why would you have been prosecuted?
I was lucky because I was running the risk of being prosecuted for money laundering under the theory of willful blindness. My lawyer explained to me that the prosecutors could have taken the position that because I have been in the industry for all these years, I should have picked up on the red flags and suspicious indicators. They'd say I turned a blind eye and that I consciously avoided trying to find out the truth.
I don't think any of us would want to be in that position, Mr. Landers. I want to thank you for having the courage to share your story with us. It must have been very difficult. Commissioner.
Roberta, many thanks. And thank you, Mr. Landers. And my thanks to you all for attending this meeting today. I know some of you have traveled great distances to join us here. And for those of you who participated via video conference, you have our thanks for hanging in there, as 'twere. To my colleagues from law enforcement, I'll see you at our next conference. To those of you from the private sector, I would urge you to go back to your businesses and review your anti-money laundering policies and procedures. Understand the types of high-risk accounts you may encounter and the red flags for suspicious activity that you are expected to detect. Understand what your firm expects of you and know who you must turn to with questions and concerns. Thank you again for your cooperation in the fight against this global menace of money laundering. Thanks so very much.
In each of the three scenarios that you've just seen, there were red flags raised about the clients themselves and about potentially suspicious activity in their accounts. It is absolutely critical that you recognize the types of customers who might pose money laundering risks involving the products and services that your company provides. It is also important how you respond once you see these red flags. When you have concerns about customers or their transactions, you should immediately contact the appropriate supervisory personnel as directed by your firm's anti-money laundering policies. The consequences of just watching and not taking action are too severe. Each of you is responsible for knowing your firm's anti-money laundering policies and for following those requirements to ensure that your company is not used by money launderers and the criminal organizations they support. We at Interpol, on behalf of law enforcement agencies throughout the world, thank you for your assistance.